If you had $1 billion, would you ever borrow money? Most people would say no. Why pay interest when you're already rich? Why take on debt when you could simply use your own money? But here's the strange part. Some of the richest people in the world borrow money all the time, not because they need to, because they want to. In fact, borrowing money can actually help them stay rich. And once you understand how it works, you'll realize that the financial game at the top looks completely different from the one most people play. Imagine a billionaire wants to buy a $20 million mansion. Most people think the process is simple. Sell $20 million worth of stock, take the cash, buy the house, done. But that's often not what happens. Instead, the billionaire calls a bank and asks for a loan, a very large loan. The bank approves it, the mansion gets purchased, and not a single share of stock is sold. Which raises an obvious question. Why? Why borrow money when you already have plenty? The answer starts with something most people never think about. What does it actually mean to be a billionaire? When people hear that someone is worth $10 billion, they imagine a giant bank account, mountains of cash, private vaults, endless stacks of money. But that's usually not how wealth works. Most billionaires are not sitting on piles of cash. Most of their wealth exists inside assets, stocks, businesses, real estate, investments. On paper, they may be worth billions, but they often have far less cash than people imagine. Think about it this way. Imagine you own a company worth $1 billion. That doesn't mean you have $1 billion sitting in your checking account. It means the things you own are worth that much. And that creates a problem. What happens when you want to spend money? Let's say you want to buy that $20 million mansion. The obvious solution is to sell some stock. But the moment you sell, something expensive happens: taxes. And this is where the story gets interesting. Imagine you bought stock years ago for $1 million. Today, that stock is worth $20 million. If you sell it, the government may tax part of the profit. The bigger the profit, the bigger the tax bill. So, suddenly, selling isn't as simple as it looks. You may lose millions of dollars just by turning the stock into cash. And wealthy people hate unnecessary costs, so they look for another option. That option is borrowing. Let's use a simpler example. Imagine your house is worth $500,000. One day you need $50,000. You could sell the house, but then you would have nowhere to live. So instead, the bank lets you borrow money using the house as security. You keep the house and you get the cash. Pretty simple. Now, take that same idea and make it much bigger. Instead of a house, imagine owning billions of dollars worth of stock. The bank looks at those shares and says, "You own valuable assets. We'll lend against them." The billionaire gets the money. The stock stays untouched. No sale, no tax bill from selling. And that's why borrowing starts looking very attractive. But it gets even better. Imagine the billionaire owns stock worth $1 billion, and that stock keeps growing every year. Maybe it grows by 8%, maybe 10%, maybe more. Meanwhile, the loan only costs a few percent in interest, so the asset is growing faster than the debt. The billionaire keeps spending, the asset keeps growing, and over time, the gap gets bigger. This is one reason wealthy people love owning assets, because assets can keep working even when you're not touching them. Now, here's something that sounds unfair. The richer you are, the easier it often becomes to borrow money. Think about it from the bank's perspective. Who feels safer? Someone earning $50,000 a year or someone who owns $5 billion worth of stock? The answer is obvious: the billionaire. If something goes wrong, the bank has valuable assets backing the loan.
That's why wealthy people often get better loan terms, lower interest rates, bigger loans, faster approvals. The people with the most money often get access to the cheapest money, and that's one reason wealth can grow faster at the top. Now we get to a strategy that many people have never heard of. It's sometimes called buy, borrow, die. The name sounds dramatic, but the basic idea is surprisingly simple. Step 1. Buy assets, stocks, businesses, real estate, anything that can grow in value over time. Step 2. Instead of selling those assets, borrow against them when you need money. Step 3. Hold those assets for a very long time, sometimes for life. The idea is to avoid selling whenever possible, because selling often creates taxes. Borrowing usually doesn't. That's why this strategy gets so much attention. Some people see it as smart financial planning, others see it as a loophole. But either way, it helps explain why many wealthy people prefer borrowing over selling. Of course, there is a catch. Actually, there are several, because debt is never completely free, and this strategy is not risk-free. Imagine you borrow heavily against your stock. Everything looks great, then the market crashes. Suddenly, your stock loses a huge chunk of its value. The bank notices, and the bank gets nervous. Remember, the loan is backed by those shares. If the shares fall too much, the bank may demand more collateral or repayment fast. This is one reason borrowing can become dangerous. When asset prices rise, debt feels easy.
When asset prices fall, debt becomes painful. History is full of wealthy people who borrowed too much and paid the price when markets turned against them. Debt can make good times better, but it can also make bad times worse. That's why successful investors usually treat debt very carefully. Now, let's zoom out, because this isn't really just a story about billionaires. It's a story about how money works. Most people earn money through work. They trade time for income. The wealthy often earn money through ownership. They own assets, and those assets create opportunities. Opportunities to grow wealth, opportunities to borrow, opportunities to access money without selling what they own. That's a very different game. And once you see it, you start noticing it everywhere. The richest people are not always focused on earning more income. They're focused on owning more assets, because assets can grow. Assets can generate income, and assets can be used as collateral. In many cases, ownership creates options that income alone cannot provide. So why do billionaires borrow instead of sell? Because selling can trigger taxes, because borrowing provides cash, because their assets often continue growing, because banks are willing to lend against valuable collateral, and because the financial system often rewards ownership more than income. The strange truth is that many billionaires appear rich because of their assets, but they spend money using debt, not reckless debt, strategic debt, debt backed by things they already own. And that reveals something important. The biggest advantage isn't always having cash, it's owning assets that give you access to cash whenever you need it. The final question isn't whether billionaires have discovered some secret. The secret is visible to everyone. The real question is this: if the wealthy build their lives around owning assets and use those assets to unlock more money, why are so many people spending their entire lives focused only on earning income? Because income pays the bills. But ownership builds wealth. One gets you through the month, the other can change your future. And in a world where the gap between the rich and everyone else keeps growing, understanding that difference might be one of the most valuable financial lessons you'll ever learn. Because the people at the top are not just playing the game better. In many ways, they're playing a completely different game. And once you see the rules, you start looking at money very differently.